on unit costs, and the Pilbara is one such operation that everyone looks to because it's easily comparable across the three big miners. BHP has performed well on costs. It does have a good C1 cost position, which is the unit cost that it takes to produce a ton of iron ore. But the problem is how do these companies grow over the next few years? What do they reinvest rather than handing out back to shareholders, and how do they plough that back into their own operations and grow in the future-facing commodities that BHP talk to, so copper, for example. And what we're seeing out of this set of results is BHP is guiding to have higher costs in copper as its flagship operation, Escondida, starts to need to move more material, and we get a bit of grade decline. There's also inflationary pressures in Chile, and whilst that does impact Escondida, it impacts the whole industry. And so that's one of the key reasons why we're bullish on copper in the long term, and why we think it's a commodity that BHP and others should grow into. The problem is, and I guess the dilemma is, it's so attractive because it's so hard to grow into.
Rob Martin here. How much potential is there for the big one to take out on the cost side? One, and in terms of a tight labor market, how are they going to offset that?
Yeah, so it's really difficult because you have these pressures globally, and they're especially prevalent in Latin America, where these high commodity prices need to be shared across the whole economy. And so that leads to inflation and higher taxes and the like. So really the only avenue that companies like BHP have and their competitors have is by investing in technology, automation, getting more out of the resource bodies that they have, and dropping energy costs, which have increased substantially. And so that's what you're seeing a lot of the discretionary capital allocation. And what do they talk to around automation and decarbonisation? That's focused on trying to improve the operational cost side. But from the labour side, there are unfortunately positive pressures there, and yeah, look, they are correlated to commodity prices in some respect, but if we're expecting higher commodity prices for longer, then we should expect costs to be higher as well. And to be quite frank, with the margins that BHP and the like make, it's probably not a huge concern.